how do institutional LPs look at the venture capital asset class?
Yeah, I think it's important first to think about institutional investors not as just one class, but really every investor is unique. I just recently made a reference to LPs are sort of like leaves falling off a tree. They all may look similar, but they all have their own individual nuance. They're unique in some way. So when you think about the institutional class, there are folks who are more conservative by nature. So they may have a lighter exposure to venture or maybe view that as higher risk and doesn't align to their goals, which may be a lower return. I can tell you certainly from working with pension funds, working with an insurance company, those types of groups have asset liability matching, have sort of a payout that needs to be met based on whether that be actuarial tables or the liabilities from each individual fund or from each individual. So there you can actually target a return and really move towards that. So in that capacity, in both of those cases, those groups do have access to venture and do have exposure to venture, but maybe at a bit of a smaller scale. When you think of the other side of institutional investing, the perpetual pools of capital, things like endowments and foundations, there may be a little bit more of a penchant for long-term wealth creation without necessarily trying to hit that specific target annually. So I think that's a place where you've seen a lot more exposure to venture. Famously, you think about the Ivy League endowments who may be 30, 40, 50% exposed to venture capital as part of their asset allocation. So I think they all come in different shapes and sizes.